Now, in about an hour's time, Uber set to make its debut on the stock market with its long-awaited initial public offering, and it's expected to be the largest IPO of the year. But the world's most prominent ride-hailing service is entering the market at a turbulent time, with both politics and competitors impacting prices. Well, for more on this, I'm joined in the studio by technology expert and futurist Steve Sammartino. Steve, thank you for coming in this Friday evening.
Pleasure.
Always good to come in to talk about these IPOs. This has been hyped so much. Uber is settling for a lower price, though. Are you surprised by that?
I'm not surprised. They're coming in at $45 a share, which is a valuation of around about $81 billion. But just recently, their biggest competitor, Lyft, went public, and since that time, in the last 3 months, their share price has actually come down 27%. So we've got a very turbulent market, and there are also many legal cases around the world funding Uber or impacting Uber's funding.
So clearly Uber's learning from Lyft's IPO earlier in the year, some lessons to be learnt there?
Yeah, absolutely. They've come in at a lower price, I think, because they want the IPO to be successful once it gets in market and have some upside there. But one of the things that's interesting is that their profitability is actually very low. For every $30 that Uber brings in, they lose 10. So it's a company which, imaginary profits only IPO in this case is what they're facing.
And it even admits itself it doesn't know when it's going to make a profit. So at $45 US, do you think it's overpriced?
Yeah, I really do. In fact, I think that Uber is unlike all of the other technology firms because it doesn't have real network effects. So in social media and in search, the more people you get in, the higher the barrier to entry or exit is for someone. But with Uber, they don't have that natural market network effect. In fact, the more successful they are, the more money they lose. So that network effect of natural information is not there.
Well, some are comparing Uber to Amazon, which didn't make a profit for years.
Yeah, a little bit different though, because Amazon was building out an infrastructure which then could be leveraged. So they were building out an infrastructure of warehousing, of facilities, and building a customer base where people would go to that online retailer. But the challenge with Uber is that every ride has real costs. They don't have that software network effect, and they don't have a permanent infrastructure for where the costs will come down. Their only cost reduction opportunity is when they remove the drivers. I mean, let's be honest, the drivers for Uber are holding places for robots when we move to autonomous vehicles. Now, the moment that happens, of course, they're going to be competing with Ford, with General Motors, and the valuation of Uber, $81 billion, is more than General Motors and Ford combined. Yeah. That is very hard to justify.
Well, how is Uber pitching itself to investors then? It's claiming it's not just a ride-hailing company, and obviously autonomous vehicles, it's where it's headed.
Yeah, that's right. So it's pitching itself really as a logistics company. So it's not only going to move people, it moves parcels and all forms of Uber Eats, any form of logistics with e-commerce. They've also got Uber Air, where they're looking with drones to fly humans. But as soon as they enter that space, then they're swimming in competitive soup. They need to remember, if they want to be a logistics company, all of a sudden they're up against Amazon, which is the world's biggest company with the deepest financial moat that there is. And Amazon in real terms is profitable. What it does is it seconds the profit it makes into growing out new infrastructure. So in some ways it's easy to think that Amazon isn't profitable, but what it's doing is using its profits for other areas of growth. So that logistics side of it, if it is that Uber is moving to that, then it becomes a much more competitive marketplace for them.
Okay, so what does it need to do to gain further confidence from investors?
Look, I think that Uber is going to be one of the first technology companies to actually be disrupted. I can't help but think they're going to compete with OEMs, original equipment manufacturers. They're going to compete with Amazon and other technology companies, even Google with driverless cars. And, I really believe that it's going to be the flop of all the tech companies in the latest tech revolution that we've seen. But in the short term, the demand will be there from investors. And here's why. We don't get access anymore to IPOs like we used to. Uber's been alive for 10 years before it's gone public. Google was only alive for 5 years before it went public, and Amazon, 12 months or so. So increasingly, the public doesn't have access to these tech companies. So people will throw in their money, but I feel as though the price will go up in the short term, and in the long term, these market realities will hit them.
Meanwhile, we're seeing a lot of disgruntled Uber drivers around the world. Do you think that this is just going, it's not definitely not helping the company's image, but you're saying that perhaps in the long term we might not even see these drivers?
Yeah, that's right. So we've got two things that will happen. The drivers may be removed from the equation. We're going to continue to see regulation. We've got the taxi union fighting Uber in court in Australia. There's action in London, all around the world. And it seems as though that's not going to go away. We're going to see a lot of regulation within the tech area, and that regulation, I think, will also have an impact on their profitability.
Do you think Uber could have chosen a better time to have its IPO?
Absolutely. In fact, I think they should have went to market a couple of years ago. Their valuation, their last investment round was over $70 billion, so there's not much upside for their recent investors, and I feel as though they should have come to market a few years ago.
So at the end of the day, all the hype, it hasn't lived up to the hype for its IPO.
Yeah, well, the founders are going to be rich, but I think the investors who are coming in late now, the retail investors, I think it's one of the ones I'll put a question mark right next to.
And just finally, how does it rank compared to other US IPOs that we've seen in recent years?
Yeah, it's the biggest one we've seen in a long time. So the latest biggest one we saw before that was Alibaba, but this is, I think, the most hyped and biggest tech IPO in some time.
And also Facebook 7 years ago too. So.
Yeah.
Okay, well, a lot is riding on Uber. We shall see how it goes. Thanks so much for coming in tonight. Really appreciate it.
Absolute pleasure.
That was Steve there talking about Uber and its IPO listing on the New York Stock Exchange on Friday.